Hey everybody, Jason Golden, the Golden Realtor, here with another great episode of Keeping It Golden, hot real estate topics. Today I'm going to go over the trend of home prices and the projections for the next 2 years in the Dallas-Fort Worth Arlington MSA and compare the cost of purchasing a home versus renting. I think this will be some great information that will help you ultimately decide if buying is right for you now or if waiting for 2 or 3 years is best for you and your family. And before I get started, please be sure to like, follow, and share if you like this content and want to see more, or even comment back if you want for me to specifically talk about a topic that you want to hear more information about. So without further ado, here we are with today's presentation. So now this is my nice handy dandy spreadsheet. Of course, it looks a bit overwhelming right now, but I will go through each of the columns and break down the information so that you are sure to understand if now is a great time to buy or if waiting a few years is best for you and your family. The first column is just simply the year that we're taking the information and data from and what we're looking to. So we're looking at December 2018, December 2019, December 2020, 2021. And we're looking at the projections throughout the year and at the end of the year based on what forecasts we have been given from the Federal National Mortgage Association, short name Fannie Mae. This column is just the median sale price. We're looking back in 2018, and then we're going all the way through again to 2023 based on the projections. Median sale price, what I've done here is captured the percent change from year to year. So from 2018 to 2019, the median sale price increased by 5%. From 2019 to 2020, the median sale price increased by 14%, double digits. From 2020 to 2021, it increased another double digits by 18%, and it is projected to continue in the trends of appreciation, however, at a single digit. So for the current year, we're looking at a 7% appreciation as forecasted by Fannie Mae, the Federal National Mortgage Association. And for 2023, we are expected to continue to see home price appreciation at a much slower pace at 3%. So as you can see, just from 2020 and 2021, home prices have increased a total of 32%. Amazing, right? Next, we have a column of down payment. This is simply what your down payment has cost and will cost at 3.5%, which is the standard down payment amount for an FHA loan. In 2018, 3.5% was $8,477, and it will increase to $12,536 should you decide to wait to 2023. Now, I have only went out to 2023 just to add a note because that's as far as the projected percentages have been in terms of home value appreciation. Of course, as we get further into 2022, I'm sure there will be more institutions, experts, analysts that will come with expected appreciation values or depreciation if that be the case. Who knows what will happen? I don't have a crystal ball and I wish I did. The next column is interest rates. As we see in 2018, interest rates were as high as 4.64%. They went down drastically. In 2020, we saw a moderate change in 2019. And of course, in 2021, they began to go back up. And this year, we have started off around 3.2, 3.3%. And it's projected that that trend will continue throughout this year and even next year, all the way into the middle to end of next year, ending at 3.5%. There's some experts that forecast higher amounts, but we'll just say 3.5% because that's the majority of what experts and analysts have said thus far in terms of what interest rates will get to. We're just looking at principal. So for 30 years, this is this column. For 30 years, this is what your principal amount would have been. This is what the interest would have been in terms of how much you're paying through the amortization schedule. And this is the total amount that it will cost you to purchase a house at $242,000 should you finance the house for 30 years. If you don't pay anything extra and you just finance the house, you keep it for 30 years, that's the total amount that you would have paid for a house had you purchased it in 2018. As I said before, in 2019 and 2020, interest rates went down drastically, although the home prices did go up. because interest rates went down, we saw that the total amount for purchasing a home did decline. Again, 2020 would have been the best time to purchase a house. So that's probably why you saw, or that's why you saw so many buyers out in the market. That's why it's been such a buying frenzy, because it was phenomenal deals out, even though home prices were increasing. And as we see in 2021, it began to make a significant change because the interest rates went up along with the median sale price. So now we are starting to see that it costs more in the long term to purchase potentially the same house that you would have purchased in 2018. To purchase that same house now, it does cost more. That's part of the cost of waiting, right? We probably will never see interest rates this low in our lifetime again, but we still have lower interest rates than we have historically. So that's why some are still actively looking to purchase a house, because interest rates are still low, although home prices are increasing. So here we see for the same house last year, it would have cost $482,000, which a difference from the previous years was a total of $73,000. If you purchase a house this year, the same house, if home prices continue to go up as they're forecasted to do, if interest rates continue to go up, you are paying approximately $529,000 for a house that you would have paid for $433,000 back in 2018. Of course, that does seem like a lot, but wait till we get to rents and I compare how much you're actually spending in rent versus buying. The one good thing about this is that you're still paying less in interest had you have purchased the house back in 2018. So that's part of the advantage of purchasing a house still now, because interest rates are still lower. And in the long run, you are paying less in interest. So if you were to double up payments or pay more towards your principal, even this amount would change. So that's a great point that I wanted to make. If you're still deciding whether to buy now or later, there are still advantages to buying now because interest rates are low. Now, if everything continues, if home prices continue to appreciate as they are forecasted to, and if interest rates continue to increase, that same house you would have bought in 2018 for $242,000 and paid a total of $433,000 after interest and your principal and your down payment, now you're paying $558,000. Should you make payments for the entire 30 years versus paying it off earlier? Should you pay the total amount over 30 years? Again, you could pay it down early if you choose to do that. Next, we just have what the monthly payments are, and we see how they continue to increase. Of course, as the median sale price increases and the interest rate increases, your monthly payments will increase as well. Property taxes typically will increase as well as the assessed value begins to increase with the median home sale price. Home insurance, relatively the same. This could be lower or this could be higher, just depends on which carrier you go with. PMI, private mortgage insurance, these are standard amounts that you typically would pay, right? And here comes your monthly payment. So this is sometimes the most important thing, given that we are concerned about the total price of the house, how much it will cost long term. A lot of people are mostly focused on what it costs now. Jason, what does it cost now? So back in 2018, your monthly mortgage payments would have been $1,924. 2019, $1,881, which was less. 2020, $1,954, going back to what it would have been around 2018. 2021, it was more, right? 2022, not that much difference, but it is a significant difference from 2018, 2019, and 2020. And then, of course, if you wait till 2023, that's about where you're looking paying monthly. So now I want to look at the alternative, which is renting. Renting back in 2018, you were paying $1,865. It was still less to rent than to buy. 2019, still less to rent than to buy. You were paying $1,733 versus $1,881 monthly for a mortgage payment. In 2020 and 2021, that's when we saw a difference because interest rates were historically low. You were actually paying less to buy a house monthly than you would have paid to rent. Again, 2020, best time to buy. 2021, next to the best time to buy. 2022 now, and potentially throughout the year, we're going to start to see a difference because interest rates are still low, but they're slightly edging up. They're forecasted to be averaging at about 3.3% for the year. but you're right at about what you would typically pay in rent at 2327, what you would pay monthly for a 3-bedroom, 2-bath house in your own house versus someone else's house or apartment. Annual median rent, which is another thing that I want to look at. Annually, you paid $22,000 for rent in 2018, $20,000 in 2019, and it's increased to $27,000 in 2021 and will continue at that amount into 2022. Total over 5 years, if you were to stay in your apartment through the end of 2022, you have invested $122,712 into your landlord or your apartment complex owner versus putting this $122,712 into your own asset. This is why I stress so much and encourage everyone to purchase a home and build generational wealth, because this is money that you are losing. Yes, you are paying for accommodations, you are paying for a house, you are paying for shelter, right? You do need that. So it's not a complete and total loss because you're paying for shelter. But long term, that could go into an investment that is yours at the end of 30 years or less. And even another option, instead of paying for the house 30 years, in 10 years, you could sell it. In 15 years, you could rent it out. Let it be supplemental income, right? So these are all options that you have when you purchase a house versus renting when you're actually paying someone else's mortgage. If you wait until 2023 to buy a house, you would have invested $150,000 into someone else's portfolio, financial portfolio. $636,000 that you are helping someone else to increase their wealth versus yourself. So I hope that was great information. I am pro home ownership 150%, and I want to help you purchase your next home. If you're thinking of selling and want to buy, I can help you with that process as well. Please reach out to me. My email is iam@jasongolden.com, or you can call and text me at 972-236-5090.